Hello everybody, this is Bulldozer Investing. Today is May 14th, 2021. It is 6:12 p.m. I'd like to conclude that anything we say in this video or the entire channel is only for educational purposes only. For those who are new, we do review a lot of tickers, and the reason why is because on Twitter I take requests. So every week, once a week on every Friday, I'll go ahead and post, and pin it for requests, and people will go ahead and you're free to go ahead and request it. There's no membership, there's no paid subscription, everything out there is free. You just go ahead and request it, and I'll do the video of the day, worst case Saturday, so the video will be out then. And then when you go to YouTube, since I do cover a lot of tickers, what you would do is on that day's video on the YouTube channel itself, you can click show more on the description, and you'll have time bookmarks. So if you don't want to listen to the whole entire video and just fast forward to the tickers that you want to watch particularly, you can go ahead and do that, and by just clicking on these timestamps, and you'll see the review for that certain stock symbol. All right, having said that, we're going to go ahead and start. We're going to review 32 tickers today. So that's going to take a lot of time, give or take 2 minutes per ticker. We'll make, go over an hour. So let's just try to do our best and be fast as possible. First, we're going to go over VIX. I was doing TradingView.com charts, but I wanted to go back and go back to my TD Ameritrade and see how accurate our drawings were, because I haven't done this for 3 weeks. And what I did notice when I went back and noticed when I just opened this is that how accurate this trend has been playing to the single cent here, and also a couple cents here and there. But you see the bottom and the top is exactly fitting the pattern if you zoom out. Okay, you can also do something like this. Let's go ahead and how did we do? Middle click. Yep, there you go. You can also do this just in case if the breakout does complete and hold, the next level will be here. But I don't see that happening right now after such a strong 2 days of killing VIX. But we haven't felt anything on the growth stocks, especially yesterday, even though VIX got crushed. It was more of today that where it picked up. But anyhow, I'm break even for the week, so it was kind of weird. I was up like a lot, 10% or something, and then I was down 10%, and today it's like break even. So mix of emotions here. One thing I want to go ahead and mention is, let's see if we do get higher lows. So the critical point here where the Fibonacci level meets 161.8, I'm going to zoom in and show you where I'm talking about. Right here, where you have the fib line of 161.8 is 1793 for VIX, and also where this trend line is going, it has to hold if the market is bearish. I guess if you are bearish, you need it to hold. But I do think that we're still in the cloud. We couldn't break it. I think we're going to just go back to lower low and maybe get a support at the blue line. I think VIX is going to go towards $15. My analysis would be wrong if VIX holds on to 1793 and moves higher, okay? Because as you can see, the rounding bottom here, it's not going to hold a cup, because if you look at the waves, I think it just broke to be a cup. Like I would have expected to hold maybe 23 and do a cup and handle formation here, but it's not. It's nothing to do with cup and handle at this point. And the last 2 days they just crushed VIX. I think it's just going to go down to 15. That's my analysis, but I could be wrong. Again, it's only for my personal view of my technical expertise. I could be wrong. I could be missing something, but if 1793 doesn't hold, we're looking at 15. So next week, I think the market will run. I was expecting the tech stocks and also Russell to pick up in the beginning of summer, so that kind of does hold my analysis. If we can pick up the end of May, and just the next run for these growth stocks is going to start in the summer, so we'll see how that works out. Next up is SPY. So let's take a look at SPY. Very interesting that SPY goes down 2% and people are freaking out. stochastics bounce, RSI bounce, MACD is still not there yet, but the two green candles on the volume bar kind of tells us the story there that we did have some buys and it might be a turnaround. Again, nothing bearish. We're still way above the cloud. Cloud is green. I don't see anything bearish yet. Now these can scare you, the 3 days, because you're like, okay, it took us from April 1st all the way to May 10th. What took us almost a month and a half, we lost it all in 3 days, and that's why it's so scary. That's how it is, you grind higher, and when things get sold off, it takes about a week for major correction happen in 2-3 weeks, and you're like, you lost years of gains. So you need to know where to put the stop losses. That's where I said, like, the critical places here was this yellow box. So if you lose that, then you're probably gonna go down. But nice to see that we have the 50-day support broke and closed above the 20 and the 9-day moving average. But the scary thing is it just filled the gap. We might retest 410 next week. So let's take a look how this bounce was. Let's go ahead and delete all this fib and all these things here. Yep, there you go. So what I'm going to do is let's go ahead and do just a simple retracement from this high to this low where the 50-day was, pick up. Actually, what is cool is that the recovery from this fall, we were able to close above 61.8. If we can hold 413 next week, I think we're looking at a V-shaped recovery towards 434. Okay. And a lot of people might, you guys might think that, I overkill and my price targets are really high. But if you take a look at it, listen, all-time high is 422, right? And I said 434. That's about 12 bucks in 422. So 420, you can go ahead and take all, take the percentage of 12 against 422. That's about nearly 3% from all-time highs. So, and I'm not saying this is going to happen tomorrow, but as soon as we take out 422, 434 will happen in a week. It's not like the days we had where SPY was 150, 180, and like a dollar move seemed to be crazy. We just have to get used to things that things going down $5, $6 going up. It's just the way things are when the price is this high. Other than that, the 50-day moving average, I'll tell you, this was more scary. The one March, the beginning of March, the first week of March fall was a little more scary because we broke down 50 and we went in the cloud. And I'm like, all right, if 100 doesn't hold, that's it. That's the bottom of the cloud and the 100-day moving average. So I was like, all right, things are getting scary. But once that bounce happened and we get a second bounce from cloud top, that's when I said that's when I was yelling buy, 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 because that's where you would basically do a bullish run after the second bounce on the cloud top. Now, the 50-day held pretty strong. Now, it doesn't mean that we're just going to go directly to 434. Remember, I said if we can stay above the 61.8. So 61.8 here is 415. We need to close a couple days above that line, then you're going to go ahead and break out, okay? But if you can't hold this run, the last 2 days of run, and what we did is fill the gap. So I don't want to cheer the market up and say, okay, that's it, we're going back up higher. Only thing we did is we just filled the gap. Okay. What might happen, and what I usually do is I can, from this low of this candle to the high of today, the retracement might be going to the 50 percentile. So let's go ahead and get this box. Why can't I select it? There you go. And readjust the width and the height. There you go. So next week, if we go fall in this zone, it's a simple retracement. 410, as I mentioned. Now it was off of a different fib, and I said 410, but we drew another proper technical, retracement here, and it's still showing 410. So we need to hold 410 next week to set maybe a higher low. So it would go, the first low is here, and we went up, filled the gap, we drop lower, we test the 50, worst case, 61.8 at 409, we hold that low again and go back up. Now that would be a healthier recovery versus going straight up and retesting the all-time high. Okay, so that's my analysis. Just to summarize it, staying above 415 will probably bring break above all-time high, but then come back even sharper. What I do want to know for next week is to see if we can hold 410 or 409. That what I want to see is Monday and Tuesday, let the market drop and come for the second bounce. Okay. Usually after such a heavy fall, 1 and 2, 2 days in a row or maybe 3 days in a row, we picked up and filled the gap. Regular procedure. Now I want to see next week is if we can continue with a healthier pullback and form a higher low and then continue the run. Okay. Next up is QQQ. So let's take a look. I like QQQ better than SPY, and reason why is because you see this 2 legs, okay, going higher, flagged. What I thought was going to happen was the flag was going to break out, which did not happen. An exact opposite happened, and we went and tested the cloud. We bounced off the cloud, which is pretty good. I like that. That's why I said it's a higher probability because we're actually much lower than the all-time high versus SPY at this point. But what we couldn't do today was to go above 50. We're still below 50, whereas SPY is above 50, bounced off of it. So we're still at a bearish crossover with the 9 and 20, and then we're also below 50, so that's still bearish in a sense. I think the resistance for next week is going to be 331.50. That's where we're going to see heavy resistance, and we might go back and fall and retest again. Now, I know I have a bunch of fib levels. I don't know last time when I did this. So we're going to go ahead and delete bunch of levels, okay? Delete bunch of things so the chart is more clear, There you go. I don't like the rounding top. As you can see, there's a rounding top here. I don't like that formation. We need to break out of it, okay? What I mean by that is I'll show you if I can draw a little circle here, okay? Okay, there you go. I mean, it's like a sphere. It's not exactly a circle, but you get the point. There's a rounding top here, okay? Now, it looks like we broke out of it, but there could be a continuation if you can make it bigger. There you go. Actually, it looks like we're trying to break out of it. So if we can break out of this rounding top, it would be great. You see this rounding top too? It looked like we recovered, came back, we recovered, and then bam. So never get too excited because what could happen is, I don't have like a drawing pen here. Let me go ahead and take a screenshot. That's what I liked about TradingView is that you can actually like select a tool where you can draw your prediction. There you go. So what I think could happen if we follow here, right? 1, 2, 3 days, bounce, came back, bounce. So it could be a bounce, come back, bounce, okay? But what you see is here is testing all the way down the cloud bottom and then coming back up, okay? And basically what this formation is inverse head and shoulder, okay? Now what could happen here is this. You can come back sharper like this, okay? So this could form the second inverse head and shoulder, okay? And I just can't tell you one way or another. It's very hard to call off. What I could say is if you are playing options or the ETF itself, this line, the cloud bottom, would be my stop loss. Okay? And that level will be 319.88. I'm going to make it clean and say 320. That's your choice. But What I see here is that it got stuffed at 50, still below, the price is still below. Nothing is cleared out yet. So just like this, right? It'll look like, you know, rounding top. This is even a bigger rounding top. Coming back, whenever you feel like you're coming back, bouncing, coming back, and then you get crushed again. They're just, you know, taking out the retail and making sure that, you know, institutions are the one getting paid, not the retail. They'll scare the heck out of you. And another concerning fact is that if you do a bigger circle, what's going on? I thought I selected this. Let's do this. There you go. Okay. This is not even like a exact circle. I might have to open TradingView. Yeah, let's do that. Sorry about the confusion, but I gotta do what I gotta do. Okay, first of all, you can see this, right? Rejection, rejection, rejection. Okay, the top, it looks like we're topping out. My prediction is that we might run towards 345. Issue is, will we, when I get that drawing, yep, there you go. Will we get out of this rounding top? That's my issue. There you go. Let's delete all the channels. Let's delete everything. I don't care if I'm correct or right. It's just okay. You know, we proved our point. I'm not at that stage. Like, I don't care if I delete something that's delete. I don't care. Like, we're not, you know, we're not here to like show off anything. We were right, we were wrong. That's fine. I'll say I was right. I'll say I was wrong. But we got rid of all the drawing. But you see my concern here. The rounding top is forming. Okay, that is my concern. What needs to happen, and I'm sorry I might have taken, you know, a lot of time for the index recordings. I have to shorten my analysis off of the regular stocks. You know, 127 here got rejected, got off the bounce off the cloud top, and then we're coming back. What I do want to know is if we can take out 333 next week. We'll probably, well, two scenarios here, and this is what I was talking about of TradingView, the path. Two scenarios here. We'll either hit 333, come back, and go like this. Okay, that's scenario number one. The second scenario is that we're gonna go back down towards 50% retracement, come back up, and find a sharper low right here. So I think the support is right here. So we might see 308 next week. Who knows? There's two scenarios. Retesting 320, coming back up, retesting this high, today's high, not able to break it, and then go back and retest 308. Or test the 100% retracement, come back down off of the 61.8. So as I'm saying this, let me go ahead and zoom in so you guys can see it better. There you go. So going off to 100% retracement, coming back down to 61.8, retrying the cloud top, getting a confirmation again, and then going off. Or we just go directly down, retest the cloud bottom and where the 50% retracement is, go back up and maybe trace down today's height and then go down to test this low right here at 308. Okay, those are my two scenarios. But again, you see my concern about NASDAQ or QQQ forming a rounding bottom. That doesn't look good. We need to break out of it. We need to see new all-time high, and it should take about a month. So we need to give a month of a month time frame to see if that happens. Within a month, if we stay in this rounding top, I will probably sell or start hedging. But notice that I'm giving a month. I'm not like, the other people where they say in every single day, like when they see a 1%, oh, market is crashing. Or regardless market going up or down, you'll see charts like this. Okay. It's ridiculous. I don't even know how these people like they'll zoom in and squeeze the heck out of the chart and be like, "Oh, you see we're in a bubble." Well, it doesn't things don't work out like that. You can't chart like that. You have to make sure you expand and your zoom is correctly configured. You can't just, squeeze out a chart and say, "Look, it's a bubble." That things don't work out like that. Well, fine, you can short and you could go bankrupt, okay? And that's why some of these, uneducated retail shorts, they're like, "How come I'm losing money?" It's because you're looking at a chart that's like squeezed out. It's supposed to be expanded and you think you're in a bubble and then it goes up like 10-15% and you're done. Yeah. All right, well, that's about it for NASDAQ, and you guys get the point of rounding top. I just couldn't draw the little arch on the think or swim. I don't know if there is a way or something, maybe customizing it, but wasn't able to do it. Next up is Dow. So let's look at diamond. This is what they call diamonds. Okay. Um, well, wow. All right. I didn't touch this chart again. What happened was uh, we were way over. So we broke out and then come back and retested this like a heartbeat. Okay. And Disney reported, I think, negative to the chart. I mean, I checked the daily chart on it. It was like -3% today. I don't know what happened afterwards, but a very nice bounce off of this support line. It didn't even touch 50. So whereas SPY it did, QQQ is below 50. So I would say this is a nice confirmation, nice bounce. And let's take a look what percentage of retracement that was. Yep, exactly to the point. That's what I was thinking. 61.8. Okay. Well, close enough, I'd probably have to configure the the points that there you go. All right, close enough. All right. It's still holding above 20 and 9, just like SPY. Would it retest the 20 around 341 or 340? Sure, it could pull back. I don't see Dow falling down as much. Reason why is because most of Dow stocks, industrial stocks, when economy opens up, I don't know if this was a rumor. Now you don't have to wear a mask in public places. I don't know if that was true or not, but things are opening up. Travel stocks, heavy industry, things like that. It's gonna go off the roof. I think expecting 360 for Dow. Now, regardless if it might not happen in a month, but my main target is going to be 360. Now, when would I be bearish on Dow? If it breaks down below 322. 20 bucks. You're speaking of 20 bucks like end of day, not really. 320, I mean 20 divide by 3, what is the current price? 344. 5%, 6%. That could happen in a month. It's nothing. 6% is nothing. We went up 1% today, about more than 1%. 6% is nothing. It could happen in a week or two. Okay, I'm not saying it's going to, but all I'm saying is I would be bearish on Dow if we break below 322. Other than that, let it fall 1%. It'll go back up 1% the next day or two. So this is kind of scary for people. It wasn't for me because if you follow the chart, if you draw your chart and follow and you can see what's expected out of the stock or the ETF. If you know your moving averages, if you do your technical analysis, you shouldn't be scared. You shouldn't be scared either way. If you're scared, it's because either you're overinvested, you overborrowed, and you're scared. If you lose sleep, I would say take out some. Okay, not a trading advice, but just a brotherly advice. If you're scared, if you're stressed out, that means you're overinvested. Well, some people, invest $100 and they still get nervous over it. That's just, then you need to see a psychiatrist. But, if you're over invested upon whatever your current worth is, you can tell. I don't have to tell you. But dropping 1 or 2%, 3%, 4%, these are nothing compared to today's volatility. You just have to get used to it. Next up is IWM. So let's take a look. All right. Wow, you see, like IWM looked bearish out of all, and remember what I said, if you have been following me for the last 2 months, we were right around here, and I said I don't expect anything off of Russell, and it was just moving. I said Russell is just gonna go up and down in this, and I probably drew something like this. Where is the box? Yeah. I know it's probably hurting your eyes. It's yellow. But just for you to see, I said, it's just going to go up and down in this price channel. Okay. So I'm still not excited yet. Yeah, today we saw some growth stocks, going up really high, but I'm not expecting anything out of Russell until end of summer or midsummer, like end of June. Okay. Reason why is because, again, the rotation is not completed yet. Okay. We need to see the rotation being completed. So I'm just going to delete a bunch of things from here. I like my chart cleaned out, okay? Actually, this can stay because it's telling us whatever happened, it's still bearish. It's still under, it hit a lower low. We can say, I mean, I don't want to like draw because I'm not very good at, um, Elliott wave, but I can see this, I didn't count the waves, but let's say that this top was the 5th wave, and now we completed the parabolic run, or whatever you want to call it. Now this would be the A retracement. B, C would be like the 4th wave, the top of 4th wave. Now again, I'm not a so zooming out of this chart, maybe you could tell us how these waves could work, but maybe 1, 2, 3rd, 4th. I don't know. Let's count that this is 5th. Then I think that around right here, like 200, it's bearish as it could be because again, like we were lucky that we went above 100 today. So remember what I said? I'd be bearish on Dow if we broke down 100. We did on Russell. We came back up. Okay. In order for me to be bullish on Russell, I would probably say that it needs to stay above 222. And I probably, on my last video, I probably did mention about the diamond formation. So I don't want to go over it on Russell, but yeah, there you go. I'll delete this. I'll delete this. Let's even delete this. Yeah. Again, you clearly see this rounding top. The rounding top is forming. So let me go ahead and draw that as well on TradingView. So we saw that in QQQ. QQQ chart looks much better, by the way, than IWM. Again, it broke down, so this chart is invalidated. Now, when I post these kinds of charts, you gotta watch out for the trend lines, right? As soon as you break down, you're done. It's no more in play anymore. Okay. So we're gonna delete this, delete this, delete. Now, what I do want you guys to notice is this right here. Okay, rounding top. And I would be bearish on Russell if Russell loses right here, 208. Okay. If you go down to 208 and lose it, it's going to break down. So be careful on Russell. Don't get hyped up about today's, 10%, 15%, 8%, 9%. So all those stocks moving up crazy. Don't get overexcited because Russell, IWM, is not exciting. How I would be excited on Russell would be breaks above and stays, okay? Maybe goes above all-time high. Other than that, you can easily go like this, come back down and retest, and then crash down. So be very careful. Rounding tops are really dangerous, okay? All right, so that was a lot of coverage on all the ETFs, which took about 30 minutes. So we're going to do all the stocks right now, and it's about like 24 of them left. So let's go ahead and do our best to fit this within the next 30 minutes. Next up is Apple. So let's take a look at Apple. Apple cloud bottom bounce, which is kind of exciting here. Closed above the 50, which is also exciting. But don't forget, we are still under the cloud. We're in the cloud, not under. We're not above the cloud. That would be a better definition here. We're still not above the cloud. Higher low, which is good. That's still good. But this broke off. So let me go ahead and. So this right here, the flag broke down, which is not good. Now the downtrend. Let's go ahead and clear chart. Clear drawing. All right. So now what you need to look at is right here. Okay. We might not be done yet. You might see the next wave down to retest 120. I've seen a lot of Fridays where Apple finished very strong. I mean, today was only 2%, so not that bad. I've seen Apple close 5% on Friday, and then for the next 2 weeks just crush down. Okay, so don't get excited. I know I was bullish on Apple, but I do want to be very protective and be cautious. You see these waves 1, 2, 3, 4, might get a fifth wave down, and then go up. Earnings were good. Everything was good. It's nothing technical. What I do think is institutions are just selling, liquidating to cover their losing positions. Kathy sold a bunch. I think she got rid of like 30% of her Apple to just cover up all the other mess, right? So I like the fact that RSI hit the oversold, came back. Stochastics is almost recovering back. MACD still has time. So I do want to see the internals are actually exciting. Okay, there's nothing wrong with the internals, but what I do want to know is, will the internals and externals meet up and say, okay, the bullish run is starting. Internals is saying that, all right, we recovered, we're good to go, we're gonna break out. But the chart itself, not so much. So we'll see. In any kind of breakout mode, I can give you a price target. I would look for this, and I would be a seller right here. And I know I was bullish on Apple. I know I said 140, but things have changed. We broke down the cloud. Now we're recovering. 131 to 133, I'd probably sell and wait to see what happens. That's what I'm going to do. I still do have call options, so I'm just going to see. I lost, so this week's, it was a lotto anyway, so I lost this week's calls, expired, I let it go. I still have June 18, I think it was June 18. Let me take a look. I still have, yeah, June 18th, 140 calls. So if we break out and maybe if we touch 133, I'd probably come out with like a 50% profit. Let's see how that. I'm break even right now, but let's see what happens. Still have time, but my target for Apple will be 133. Next up is American Airlines, so let's take a look. Very nice support on the fib level, 61.8 at 21.29. I do remember covering American Airlines last week, broke out, held, and it needs to break out. So it basically closed where it needs to break out from. Internals are ready. Internals are bullish. Everything looks like stochastics, MACD, RSI, everything is good. Issue is it needs to break. You see this right here, the top, false breakout. The 50 and the trend line is meeting up. So 50-day, if it's above 50 moving day and maintains to close above it for a couple of days, then you're looking at a next bullish run. However, American Airlines, it's not just, it doesn't act on its own. Okay, it doesn't act on its own. Let's clear up everything. What it does is it'll follow the sector. So it's a sector stock. Okay. United Airlines, you're looking at other airline companies and so forth. You're going to go ahead and follow up with them, right? So let's go ahead and draw one trend right here. All right. So if you are bullish on American Airlines, and I can't give you time frame, and when I can't say when that happens, because I can't, like, I have to work on the chart a little more, and I have so many other stocks to cover today. I would be looking somewhere around $30. Now, if we do zoom out, and probably we'll see a very, well, not in a year. We'll have to do like maybe 3 years. Yeah, where's $30? Right here. The previous, right before the fall. I'm not sure if they have diluted since then or sold any shares, but we'll probably go back to pre-COVID $30 region once if we can manage to recover from all this COVID travel thing. Okay, so any news on COVID travel restrictions lifting off, I think the stock is ready to lift off, and $30 should be your ideal target at this point. Next up is AMD, so let's take a look at AMD. Let's clear the chart because I've have a lot of drawings. All right, the chart itself, it's not on a breakout mode yet, I can tell you that. If it breaks out, it needs to break out of this orange line. It is kind of ready, like I would say like if it hits 70, it might be ready to bounce towards 79. At this point, if you get it at its current price around 74.50s, you might have a chance of going lower around 70. Basically, we'll fill this gap right here. Has it been filled? Not yet, actually. It's not been filled yet, and not all the gaps should get filled anyways, but I'd say like 71, 70 would be like where I would buy and sell the bounce and look for another opportunity. Now, if you're long term on this, you can go and say like 3 years. The ideal bottom or the definitive support level is going to be right here. Right here, 74. Well, that's exactly what our price is right now, I think, a little above. So I'm gonna look at the weekly chart also just to see what's going on, because we have shortage of what do you call chips for anything, cars, anything, right? So we'll see if once everything is good, manufacturing is back up. I'm not sure if that's gonna help. I like the weekly chart much better. It's much cleaner. I can even delete this trend line right here, and you can see how critical we the chart is right now. And just to show you that, let's go to, because I think I do have a tool on, not that I do, TradingView does. The rounding top, is it completed? Is it done? Yeah, I think rounding top play is done. And you see this support line that I have it on here as well. So right now it's been holding on the weekly. It did close below the cloud for the first time on the weekly cloud, by the way. This is not, but what I'm going to draw is, okay, it's forming a triangle. And I could have drawn this here, but you get the point. Okay, it's forming a triangle. Top, okay, top. So the next bounce, if it does, and don't forget this is a weekly, I would say I would target 84. If I buy right here, I would be a seller around 84. If it breaks down below, that's going to be your support is going to be 67. So let's take it back to TD Ameritrade or Think or Swim. So if we break down below 74 and close down on the weekly, okay, we're going to see about, we said 67, 68 around there. Maybe this top of this candle around 69. So be very careful. If you do have hedging for 70 puts for 2 months out, would be an ideal technical or logical situation in this point. Okay? But just having drawn this little, support line and this top trend line does show you a little triangle formation. So that's it for AMD. Next up is Blink, and Blink had an awesome day today. What was it like at 14%? But you look at the chart, it's not so exciting. In fact, the holders for this stock is probably very tired. Look at this recovery. Look at this candle. This daily candle, guys, from 26 all the way to 31, then lost it all. Came back down 26 all the way up to 30 something. So, what happens is that when you see such moves, you're like, okay, next time it happens, I'm selling it here. Next time it happens, I'm gonna sell, and then I'll wait for a dip, and then that dip never comes, and then the run starts. Okay, they're basically frustrating right here all the retailers, and maybe somebody is just, some institutions are like, okay, I'm getting rid of it, and they just sell the highs, and then it just crashes. But I just wanted to show you something. Like 26 to 31, right? That's $5 and 26. That's about 20%. Okay. You make 20%, lose it all. You make another 20%. That's how you play the bear market. Sometimes, I'm not saying we're in a bear market, but you make 20%, sell it, buy again, you make another 20%. Now, if you sell with 20% profit, remember the next 20% your profit will be actually higher because you'll be able to buy more shares off of the first initial 20%. So even though it looks like, nothing is going on in the chart, it's boring, it's actually not. So there's clearly a defense line around 26. 26, low 26, mid 26, whenever it hits it, we've seen it here, and it started the run. This run was kind of crazy from 25 to 35, $10 move in 2 days. 2 days. And then actually that move wasn't ending at 35, it ended at 41. So you're looking at 24 to 41. That's about like 90% nearly. I would say, so let's clear this chart. Just giving you guys ideas how, you look at a chart, but you don't really, oh, I see a nasty head and shoulder too. So we'll go ahead and let me do, because I can't draw it here, but I could do a screenshot. So the head and shoulder is here. Basically broke down the neckline, came back, retested this. Okay. Now what it needs to do is you have the 9-day. So try the 9-day, come back and retest this level right here. And I'll show you what that level is. I don't have the price. I didn't copy the price target, but eventually you see this right here. Okay. So I'll show you what my play is going to be on this, or not my play. I don't own it, but what the technical play that I could see would happen. And this is a weekly chart. Let's do daily. So this didn't work out. This didn't work out. It's actually clear. Can I clear this chart? Remove drawings. There you go. Actually, I could draw head and shoulder right here. Bam. Okay. That's done. So you're done here. And then you went down and retested this previous low. And remember, when we went off of 26, it went all the way to 41. So what would be our ideal target? Maybe retesting right here the neckline, okay? Coming back to form, maybe an inverse head and shoulder. So this, well, I can't do it, but I'll show you in a second. So then eventually testing this cloud. Okay. So when I said inverse, this right here is an inverse head and shoulder, and then testing back the 35. Okay. Now, breaking above 35 is going to be bullish. And then it'll come back to retest the cloud top and then continue its next run. However, we could say that this is also an inverse cup. I wish it also had a cup and handle drawing, but do you see this inverse cup and handle? So when we say that this line here, when it gets supported, it's not for a pretty reason. It's actually you want this line to hold, and it's very critical. The reason being is that it would be an inverse cup and handle, and it'll just crush down. You do have the head and shoulder. You see that in the background too. So the best case scenario will be this. The worst case scenario will be you lose this and you're done. So you would lose this. This would be like, you see this arch right here. Oh. Yeah. You see this like up, 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 up. You see all this? So I wouldn't be surprised, and it would be bearish. So don't get too excited. So with these stocks, don't get too excited over 10 days of or 10% days, or don't get your hopes down when you have a minus 10 day. But overall, just looking at this chart, 2562 needs to hold. Anything below that will be dangerous. Okay. You're first of all still at the bottom of the cloud, and you had the head and shoulder breakdown, And only thing your hope would be that these lows right here needs to hold. If you do have, tight stops, that would protect you. But playing this daily as a trader would be this a day, trader's game right here. So these are 30-minute candles. You see how the cloud, like it has still not broken on the 30-minute. It still not has been broken above. Okay. So I don't see anything bullish yet. And I can only tell you what I see. So this is what I see. Next up is BRY. Did I spell this right? Somebody actually, Berry Corporation. Let me double check if this, maybe it was a misspelling. Nope, somebody actually did request this. It's a strong chart. It's on a move. I like the distinctive channel here. Right here. Right here. So your next bounce up could take you to $7. I don't know what the company does. I don't know, it's a corporation, but I don't know what their business is. Anything breaking above 635 could take you to a resistance of 679. So I'm going to draw these lines and then zoom in a second. So where I'm getting these is the previous price levels. Okay, so that's why you're kind of stuck here. It's because of the previous bottom supports. It now is acting as a resistance at this point, and you see the two red lines that I drew as a resistance, this one and this one. So you need to break above 630. Your next resistance is going to be 667. However, anything above that, it's going to push you up to 718. And I bet you that 718 level is probably another, pre-existing bottom support. So right around here. And let's take a look now. So there you go. Your levels 630, 668, and 688. So these are very critical. And look where it touched. Wow, twice actually. So it's very critical. And I mean, I can draw an extension from here, but this stock has such a resistance from the previous, support levels and it looks like the price action is just within the same range. So target 662 to 696. So I said $7, but that would be my target for the near term. Okay. Next up is BNGO. Yeah, my brother-in-law's in this and he did lose some. He wasn't even happy about today's, huge up day because, a lot of people, and I warned them, they're like, all right, we're recovering, and they're happy about this, $5.58 to $9. They're like, and I told them sell it, you can buy it lower, it's going to retest the previous low again, and it did, but again, it even broke down. The point here that I'm trying to make is these stocks, when they go up high, they go up high, but you have to sell the rips on this. It's a good company. I have no doubt that it'll go back to its previous highs, but it's so frustrating when you go up from $5 to 7 something. That's about 50% move. You need to sell it because what happens is that from 767, it's going to 4. This is how people are making money at this time, the institutions and so forth. So you'll think like they're selling out, they're cashing out, but huge wins right here. Tell me what kind of stock was going to make this money for you. $5.63 to $9. That's almost 100%, 80%. Okay. It goes back down. You get a mini, update here. So from $7 to 8.44, that's about another, 20% move or so. Coming back down here, the waves, look at the waves, so much profit in here. 510 to 773, that's more than 50%. Now we're looking at, the low was 430, and then now it hit like 560. Even the 430 to 560, yesterday's low to today's high. Yeah. That's about 30% move. It's like playing options at this point. Now, what do I expect? What is the move in this stock? I don't have a clear indication. What I could say is, and I gave you these levels, but let's go ahead and do this. By the way, like this was drawn when it went above my prediction, and this one never worked out. Okay. I just want to see one thing from this high right here to this high. Yeah, we're still below. We're still below. Yeah. Yeah. Unfortunately, I don't have a price target on this one like on the way up. I can tell you where the resistance are and where the support is, but I would not be able, I would basically lie if I just I probably make up something if I were to, I can't forcefully say the stock is going to go this way because we're having lower low. So here and here, lower low, lower low. So the next way up could be like 630, but it could, is it going to hit or is it going to break out or is it going to have the third lower low? I don't know. But all I can say is that our resistance levels are working to the cent. Look at this today. I was off maybe a couple cents. So $5.60. If next week we hit 582, that would be a resistance. Okay. 582 is going to be a resistance for next week. That's all I can tell you. And if you break above 582, you can go to 629. This is very critical because let's see how, here resistance, 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 resistance twice here. And now if we can break out, then I'll be like, all right, recovery time. But right now I can just say dead cat bounce at this point. Huge one. 50%, 30%, almost 100%, 20%. So sometimes you can make money off of stocks going down more than, stocks going up. You just have to know where to buy and sell, and that's why I say the bear market is where the true traders are. Bull market, everybody's an expert. Bunch of YouTubers came out, on 2020. They don't even know how to chart. They don't even know anything about the aesthetics of charting. They just, go to Google. So this is what they do. This is what they'll do is they'll type BNGO and they'll give you a chart analysis off of this Google. I mean, it looks more cleaner than my chart, definitely, but that's how they might know, and they'll just go ahead and research and read a couple news and just read the news and make a video about it, which you can do as well. It'll probably take you the same amount of time. So that's what it is, a bunch of YouTubers now going out have nothing to do with any technicals. Everything is not technical, but you get my point. On the way up, on the bull market, everybody's an expert. So this is beyond my expertise. I can tell you that. I could tell you that the support is going to be 381 and the major resistance is going to be 637. Beyond that, I can't tell you anything else. So that's it from my side. Next up is CBD. When the person requested it, he said, I know you don't like these type of stocks. Looks like from Brazil, I guess. Distributor. I don't know what they do. So that's number one. I can Google it really quick. I guess it's oil. I don't know. When I type CBD, the issue is it comes as like the CBD that we know. So let's see what kind of business they do. Engaged in business retailing of food, general merchandise, electronics, goods. So it's kind of like they do everything. Brazil hit, COVID hit hard, just like India and other countries. Um, this would be a long-term hold. I can't really tell you the technicals on this one other than the 100-day and the cloud top is at 1062. Everybody can see that it doesn't require any expertise. And it needs to stay above 9. It couldn't break above it. But only reason why I would, and I don't know why they were down so much that day, dropping from $17 to 382. I don't know what the reason behind it. So this requires a lot of researching for me to even like analyze on anything. And we see the stock going down, coming up, going down again from 22 all the way to 9, and it never hit 22 again. So just because the stock dropped, it doesn't mean it's going to go back to where it's going to drop, where it drops. Depends on the company, depends how popular the stock is. This is an ADR. I don't know the volatility or the volume on this. I mean, as far as the chart goes, it's a slow moving, dividend paying company. But support, I can tell you, support 579, first line, and resistance 744. But would I buy this stock? Not my type. You're gonna say, why don't you like it? From 382 to 7. Yeah, I would say like buying it here would have made sense, but from 382, let's say $4 to $8, rounding it, like nearly 80 to 90% up. I don't know. So at this point, you're looking at a resistance of 740 and a support around 580. Okay. Next up, CCIV. A lot of people are in this, right? And I drew these lines way back when, at least 3 weeks, because I haven't opened up Think or Swim for some time. And I warned you guys. I said if it drops below, that's where you're gonna have trouble. And look what happened. It tried 1, 2. This time it tried the line, and then the second time, and this line, by the way, is the cloud line. That's why I drew it. And it tried the 9-day. Now it's like staying here. Lower low. That's another bad sign. However, looking at the stock zoomed out, let me go ahead and pull up, because I hate some of these things I can't use, which I hate. So I have to come back to Trading View. Okay. You saw this bottom, right? That bottom is gone as well. So anything with the stock that I would say would be, it needs to hold 1712. That's for sure. Rounding bottom is done. Another thing I look for is like a certain trend in the stock, like a channel. You're in the middle, and that's going to be a problem. What kind of problem it could cause, I'll tell you. If you're willing to stomach this, then take the bullet. It's either going to hit 1977 or if it breaks down below 1769, which is fairly close to the current price, it could retest 1392, which is 14 bucks. You're in the middle here. So I wouldn't suggest to take a position. It's a hard choice. I wouldn't. If you're already in the stock, I don't know what to say. Because I'm gonna sound bearish. I'm gonna sound like a shithead and try to. I don't want to make people lose hope, but then I don't want to give people false hope. And at this point, the levels that I said needs to hold, it didn't. I can draw other levels. I could draw many levels. This needs to hold and that needs to hold and so forth. But when it comes to patience, and you can invest in something else and recover that. This is kind of like the BNGO chart that we just covered up. You see this move from 20 bucks to 32 bucks, more than 50%. Then you look at here, 17 bucks to 24. Okay, about 20-25%. I don't know. Yeah, 40% actually. Excuse me. That's 40%. Okay, so that's how people are making money off of these stocks, not just sitting and holding, but selling at the tops and buying at the critical support levels. So how can you do that? I'd say the top would be like selling a major rip, like would be at this level, which would be 24. When if it does get there 24, you sell and you wait for the next opportunity. Other than that, just sitting and holding, it's fine. It's just that how long can you stomach if you break the next support line? How much can you hold? Okay. If you borrowed money, first of all, that's going to be painful. Next up is CHWY. I am just going really slow today. I thought I was going to go fast, but yeah, this is a broken chart as well. This is right here. What you don't want to get, this line right here at 76, once it's broken, it was done. Now, how far can it go down? I would have said it should hold at 70. It even broke below and it went down to 64. Now, issue is CHWY.com basically went, parabolic. It's because of all the corona stuff, right? Stay home. You can't go to the pet store. Then what do? You order online. But now it's gone. This is kind of like if I open Zoom's chart. Let me take a picture of this. Or why? I'm so old school. Why am I doing that? Okay. Right here. Let's do this. Let's open CHWY. And then let's compare it with Zoom. Do you see the resemblance of the chart? Do you see this? It's exactly same. Okay. The fact that, look, this went up to like almost 300%. Now it's at 123. So it's lost more than half the value, right? Here, 600% all the way to, the percentages are same. Now, reason why the percentages are same as in like this moved 600 some percent, this moved, a lot less, but you get the chart, right? You get the chart, same chart. Even Zoom actually picked up a little. Okay. I can add on and I can add another comparison and say, well, Peloton is a different story, but because it had that little incident, right? But look at Peloton, one way or another, you see similarities here. Okay. So that's, just wanted to point that out, that it's not about the stock itself. It's about the seasonality. It's about what happened, um, and how things work out. Stay home stocks, not so much. So the airlines, the cruises, when these ripped, you sell, because if you look at December, so let me compare one more thing to just show you guys another, idea here. Let's compare Carnival Cruise. Okay, when this was up, or even we can add more, right? Carnival Cruise, we can add American Airlines, or let's say, will Boeing make any more sense than American Airlines? Let's do American Airlines. Okay, they were at their lows. Look at this. They went up, but they lost big. Here they maintain the price. When the market dropped, they maintain the price. And they're going to climb up. They're going to climb much higher when the recovery starts. We're still not we're halfway in the recovery. Now, when the recovery started, look what happened. And of course, the February crash. So look at this. When the stocks started crashing, what happened to the COVID stock, or the non-COVID, the opposite, right? The travel stocks and the airlines. These went up while the rest of the tech stocks sold off, and these kept going up. Look at the lows here, and it went to the highs here. Okay, so this is not about if CHWY is a good company or not. It's about, you got to play the right market, the right, you got to play the trend. Okay. Will it have its days? I don't know. It's well below the cloud. The next support line seems like 61 to me. Around there, like give or take, like let's say this cloud line right here seems like 61 and 62.9. Is it a good play here? Yeah, you can buy here and maybe sell around 70 and wait for the next like lower. But other than that, I I can't say, because of the chart, it's worth the risk, but the issue here is you're below the cloud. You see this fall, you're above the cloud, you can play the next bounce, right? But when you're below the cloud, the bounces, you got to sell quick. That's when I say, like, with the bear market versus the bull market. Bull market doesn't matter. You just, keep on buying. It goes up, doesn't matter. But with the bear market, you got to know when to buy, when to sell. You sell right here, bam, it crashed, right? Because you see the support line, it broke off. Okay, so that's all I got to say with CHWY is the support is 61, like 61s, 60. So 61.8 to 62.90s. That's where the support is. But the chart is pretty much broken down. Okay, you see this? Broke down. Done. Next up is Facebook. So let's take a look at Facebook. Um, nice bounce off of Facebook. RSI coming back, stochastics reversing, MACD not fully ready yet, but it seems like it's going there. It might go back and try 323. Weekly 325s, maybe 2 weeks out, 325s would be reasonable. You can also do this extension here. It did reach 50% retracement, or it did reach its 50% extension. What I would do is, on any fallback for next week, if it hits, so don't just, like, when people buy calls blindly, I'd always want to play the bounce when I do the calls, right? And even that, I'm like 50% successful. So let's take a look. Anything around 307, 305, I buy like 3 weeks out for 320 calls. That's what my plan is. If Facebook retreats, back and retest 307 or 305. Because it hit the 50% extension, I do want to see it pull back and get a support. If it goes higher, your level is going to be 320 to 323. So let's draw another yellow box just to show you the target of the way up and the way down. When I say way down, I don't mean like way down. I mean like for next week target. Okay, this is the way to go up and this is the way to go down. So you have to pick your play. Okay, take a screenshot or whatever, just get the levels. That's what I would play. Next up is FUBO. Again, another stock that had a tremendous update today. But then you look at the, the ups and downs, you're like, 30%, 40% coming back. But the earnings were great. And the fact that Disney earnings weren't really impressive, what the analysts had expected. So every single line that I drew on FUBO, the support and the resistance, it had played. Well, this one I wasn't expecting it to go that low, but that morning everything crashed down, so it's not my fault. Okay, but anyways, picked up right now, closed right around the resistance area. I think the stock is gonna go and do its thing and try to go to the 50 moving day average around 23 bucks. Has it started its recovery? Is it finished? It's too early to say that. I can't say that right now. But has it hold? Did it hold where it's supposed to hold? Yes. Is the chart still bearish? Yes. But is it at the end of its bearish phase? Yes. Look at this RSI. We're seeing higher lows and it's climbing up, which is very good. Look at this trend, right? Trend going down, 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 down. Finally, it's transitioning. Now, in order for me to be bullish on this, or say like, all right, like we're definitely breaking out, okay? First of all, cloud is red, so any rip under a red cloud you'd like to sell. You see this trend line? We need to break out. Now, I could have drawn it like this. Yep. So we need to continue the up. If we pull down, your support is going to be around, what does it say? 1819. So 1819 should be a support. Let's zoom in. There we go. So this 9-day moving average, 1815, 1819. So that's your support. If it holds and if it breaks out, your resistance is going to be 2320s around there. So look at this level. Okay. Look at this level. So around anywhere from 2270 to 23 is going to be a huge resistance. The cloud is so thick and red. I don't see it like starting its bull phase yet. Okay. I would say it will probably start the bull run around mid-July. Okay. I don't see a rounding bottom yet. Okay. And you guys know that I've been, doing FUBO for some time, so there you go. I want to see this. So let the cloud like get squeezed and turn its color, something like this, right? Okay. And then come out big. But for now, if you draw this downtrend, let's delete everything. Okay. For now, if you draw this downtrend, it looks like it broke out, right? But you never know. The support needs to be here and then go up, come back down, something like this, okay? So that's what I'm expecting. So when I say FUBO, yeah, nice job. Today, it was a great job. But don't forget that this stock was higher this week. It didn't close. So the weekly candle wasn't like it wasn't at its highest. So let's take a look at the weekly. So the weekly candle, the weekly 50 basically got rejected. The weekly 9, remember I said like 2070, no, what did I say? 2270, sorry. So 2270, but it looks like the 9-day on the weekly could be a resistance as well. We'll see. For currently nice weekly candle, if the next week, if we can stay above 2046, that or 2050, that will be really good. That would be promising. But if we close the week under this trend line, then that will not look good. So just doing it weekly here. Yeah. So on the weekly trend right here, you don't want to close below 2050. Okay. If you do, then you can go lower low, which you don't want. Okay. Close above 2050, then that will be promising. But you see this weekly. Oh, I keep forgetting I can't draw. Like the bull run starts with the crossover. That's the bearish crossover, right? We want to see these moving averages curl up with the price, okay? So the stock is not ready yet. Don't get excited over these days. It's great. You can celebrate, but we're still in the game, okay? Next up is GEVO. Again, hitting the resistance. Most of the stocks look very similar because they're all growth stocks, okay? Right now, resistance on the moving day average of 20-day moving average is your resistance, which is sitting around 621. That's going to be your resistance. Again, all of these stocks had a tremendous day, but we're not started. Don't get sucked up into things. Nothing broke out. Nothing just changes direction in a day. It takes weeks, okay? It takes weeks. Even if you move up, you're probably going to move up to 774. If you're happy with that, I'm happy for you. But I can't really say that we're going to go all-time high again, right? There's a trend. Follow the trend, okay? There you go. So you're at the top of the trend. Don't forget that. Okay? Don't get too excited over when you're at the top of the trend and then things go down again and it's 351 and you're like, shoot, you know, or you might say something else. So I want next week, I want GEVO to stay above 617. Okay. Look at the weekly candles. I can't auto zoom because it's already auto zoomed. Okay. Weekly candles, you see the clear resistance here? Sometimes when you look at the weekly chart, then you don't have to play every day. You don't have to trade every day. When you're looking at the stock, you see 1, 2, 3, 4, 5, 6 weeks. That's you know, month and a half. So you can wait month and a half and say, okay, you know, there's a clear resistance at $9.90 or $10. Let me not get in until it breaks out. So 1, 2, 3, 4, 5. Let's see what the 6 week is going to do. Resistance is going to be right here. Support, it's going to be right here. So let's zoom out. Let's go into the daily view and I'll show you what the levels are. Support 562, resistance 781. That's lots of gap, but that's on the weekly. Don't forget. So weekly, when we're talking about weekly, we're talking about like 3-4 weeks, not days. Okay. But that's about it. That's what I can think of at this point. Other than that, most of the growth stocks, rather it be GEVO, rather it be FUBO, rather it be BNGO had great day, BLNK had great day, but the charts tell me you get a lower low. So, you know, here, lower low, here, lower low, right? Here, you might get another lower low and you're like, okay, I quit stock market. So bear market, if we are in bear market, which I don't think we are looking at the ETFs and indexes, it's very similar to how the reaction is for the last couple months. So the last couple of trading psychology for the 3 months, imagine that going on for the next couple of years. So it'll ruin your psychology sometimes, and the best way is just go in increments slowly. Don't put all your money in, just buy very slowly. Okay? At this point, if you go all in, you don't know if the stock is going to go to 420 or it's going to go to 770. GSK is next. Is this the, yeah, GlaxoSmithKline. In Europe, they're pretty big. They have a lot of medications. I know them. In America, I think they're still in America, but they're pretty big in Europe. And it's an ADR anyways. It's kind of like how we have like Johnson and Johnson or any other like big drug company. They're kind of like that. Here we have a trend line. Okay. And it's a nice company. It's not a bad company, but it's kind of like Pfizer. It's not gonna go away, but it's not gonna like fly to the moon. I would say if the run continues, you're looking at 40. Pull back will be around 38.24. If this trend line breaks, you're looking at a cloud retest of $36. Okay. Next up is IBO. Again, these stocks were the high flyers of back in the days of when we had like, people buying, and then selling, like buying at $1, selling at 7 and so forth. So in 2020, it didn't have this run like it did, back in June or July. So beginning of 2021, it did have a pretty good run from $1 or 112 to 287. Not the huge run that we had in 2020, but a small one, but a considerably good one. Now, I don't know what IBO is working on, but what I can tell you is that these kinds of stocks you buy, you don't put your whole life investment into it, but when they run, they'll run. And what I'm seeing here is it's going to break out. I love that it's in the cloud. I love the fact that it's at the bottom of the channel. I can see it going towards $2. I don't know what will happen when it reaches the cloud top. If it rips, you see this, once it rips like it touched the cloud, came back, but once it goes out of the cloud, it can have an explosive move like $1 or so. Let me zoom in for you guys to see this trend better. And also for me to chart better because I'm just charting. There you go. So if it moves up, I'm thinking the cloud top around $2. And you don't even have to buy and sell with these things. You just buy at lows and just keep on collecting it slowly. And then it just rips, you sell, and then you buy back. Something similar happened to me and Chris, but right around here. But I was frustrated because, I learned my lesson big time. I was playing the stock, around, I messed up. I was playing it, you can't really see it, but it's like, 130, 140, 130, 140, and I was like, all right, I'm done. I'm just, I'm tired of it. Sold it. Had like 10,000 shares or something. I can't recollect what I had. I'd be making it up if I say a number. But, it went from 140 at the time that I sold, $8 or something, and then the other day it went up to like 17. So if you held like 10,000 shares, $10,000 or something, or like $14,000, now you have 170,000. Not like crypto money, but again, crypto is kind of different. I'm not a expert in it, but these are the kind of stocks that you do your research. You know science, and you understand what you research. You just buy and collect until you hit the lottery. But I'm zooming out on the weekly, it's a head and shoulder here, and it's still way on the weekly. It's way below the cloud. On the weekly, what I see here is your resistance is going to be $1.94. I said I see it going to $2, so give or take around there. Next up is MELI. So let's take a look at MELI. All right. Wow, it closed below on the weekly 50-day. Support is going to be at 1,217. So basically this top right here is going to be your support. This top and this bottom. Okay. What I don't like is that it lost the trend. You see this right here? Okay. So there was a trend and it lost it. It did everything to stay above it, and then it lost it. I don't know if it was the earnings. It did have an earnings call. I don't know if it was good or bad, but you're looking at a support of 1212. Next support is going to be 1000. This is a weekly chart, by the way. Okay. If it goes up, your resistance is going to be 1560. Let's take a look at the daily chart. Much more clear here where the support is. Previous resistance here, then the support. Now it's definitely gonna test 1200. That's what I think. If it goes up on the 9-day, on the daily chart, 90 moving average, 1413. Okay. But that's about it. It's a broken chart at this point. Way below the 100, way below the 50. I don't have 200 channel here, but the 200 moving day average, I don't know where it is. But and the MACD stochastics, RSI is at oversold, so you might get a quick bounce to 1400, but after that, I can't really say it's a bullish chart. Next up is Netflix. Oh, I'm sorry. All right. Wow. Oops, Netflix, bad. It even though it looks like it wanted to go up, got stuffed on the 9-day moving average. Now, RSI has been oversold territory for some time now, at least for 3 weeks. Stochastics, MACD is still resting. I don't know if it was the earnings. I don't know what it was, but after the earnings, price decreased, and it doesn't have relative strength. I can tell you that there's a definite, look at this. The support, as soon as it lost the support, you're done. I wouldn't waste time on it. I wouldn't, when I say waste time, right? There are other great opportunities where you can take an advantage. Netflix is not going to give you that 10-15% a day. And the fact that the next support, I'll tell you where you need to watch the levels of. You're looking at 476. You're looking at 460s, 468. So these are the next 2 support levels. Can I draw a Fibonacci? Yeah, I can draw a Fibonacci too. I mean, no issue. Fibonacci just shows us the previous, resistance here at 512. I don't think the chart looks pretty. I won't be a buyer, and the chart doesn't excite me. There's just a clear price action level here, right? You're at the bottom. Look at this yellow box. You're at the bottom of this price action. Now, if it settles around 476, it would be a buying opportunity, and wait some time. It's not gonna, again, it's not gonna move. The chart is just kind of like Amazon in a way. If I open Amazon's chart, yeah, has this long price action. Lot of people thought it broke out after earnings, but again, it's been a long price action. Once it breaks out, then yeah. But same with Netflix, same with Amazon, it's just a boring chart at this point. I mean, and they both don't, to my knowledge, they don't have any dividends, so it's not worth waiting for that price action. Next up is NIO, so let's take a look at NIO. All right, so we have a descending wedge. You can call it a triangle, whatever you want. The chart seems like, even though again, might had a good day. Yesterday, all the Chinese stocks sold off. Support is going to be right here. Or let's go to, so actually, wow. Yeah, right here. So support, and then let's do a resistance. If you're long in the name, that's fine. If you're looking for a trade, I would say do a tight stop loss right at $32. Resistance, $34. So you're gonna play around, but if it falls, if it breaks 32, it's gonna go for a lower low towards 27. And it's still in this long wedge. Once this wedge, like maybe if it like plays around like 26, once it breaks out of the wedge, it's gonna be a huge run. No doubt about it. You might, I don't even know where to start this. The run could go all the way to 130 bucks. But in order for that to play, you need to complete this wave of, and I think I'm going to go back to my trading view again. It just didn't happen. Again, it just didn't happen. I was bullish. Chinese stocks were down. It never picked up. This 50-day Fibonacci level at 35 resistance. 27 I said was a support. It's on a, so this is what I mean by I don't have to draw a Fibonacci. You see the Fibonacci here says 27. When I was doing this right here, why do I have like two NIO charts? Okay. So when I said like support is at 20, it could go as low as, 27. Everything just plays out by itself. All right. Let's do this. Let's clear the chart. And then what I'm going to do is drawing the triangle pattern, right? So you're going to go up, down, up. Okay. Do you see these now? It could go as low even towards 23. But once it rips out, that's when you have a different story. Once it rips out, again, this is just a rough estimate. So let's say that it does play out and go all the way to 22. And then it breaks out, okay? 104 to 100. We said 126 roughly back in the other chart, but 104 is doable to 127.20 percent here. 104 would be doable too. But in the meantime, you can't just go all in or just put all your money in. Just slowly collect, slowly, slowly, slowly until you rip out and you're like, all right, I'm ready to ride this. Okay. And how heavy is that? Let's do a price range. I think that's what it was. You're looking at a 66% drop from the top. That's huge. But when it rips, it's going to go to 127, so, or 104, I'm sorry. So is it worth it? Yeah. You just keep on collecting. I love this chart. It's just that you don't know when it's going to break out. Obviously not right now. It's clear that. It's clear as daylight. It's clear as daylight. It's not going to break out right now. Okay. Next up is NNDM. So let's take a look. Let's do this yearly chart. Very, very similar. Very, very similar to NIO's chart in a way. Let's clear the drawing sets. Let's fix this. Do I see a rounding bottom? No. Do I see a breakout? No. Did we see this chart in CCIV? Did we see this chart in BNGO? Did we see this chart in NIO? Did we? It has nothing to do with the stock. That's what my point is. The chart right now, every single growth chart you will see, including Palantir, including everything, the charts are similar. It's not your company. Now, if you have invested in a company, just like I said, like NIO is a good company, right? If you're invested and it drops, take it as a gift. Now, I've not done my research on NNDM, but it's very similar chart on all across the board. So let's do this. This was NNDM's chart, right? Or this was NIO's chart, right? So let's look at NNDM. Same old, you know, it didn't break out, so it needs to break out of this descending wedge or falling wedge in order for me to be bullish. It's sitting right in the middle. It could go to 480, $5, or it could go to $8. So you're sitting in the middle. But what I wanted to show you is this, you know, triangle 1, A, B, C, and D. Actually, this is not as, I'll take my word back. It's not NIO's triangle here. Now you can try this in different formations and say this was A, B, C, and D. Either way, it's broken. So regardless what kind of triangle you draw, what your ABCD is, triangle is broken. So at this point, how would I be bullish if it stays above 650? Other than that, I will not be bullish. Right now, it's more closer to $5 than $8 to me. Again, all these charts, all these stocks had great day today. But don't judge them. I've seen many Fridays where I made 10% and for the next month, my stock went down 50%. So don't get overexcited because look at these candles, almost identical. Look at the body, the top, right? Look where it closed, look where the wicks were, almost same. So all you did on this week, so the week started on the 10th. The 10th opening price was 659. The Friday before that, the high was 688. So from 688, it went down to 540. Now, when I do these charts and when I say like I can't lie about what I see and I have to be honest, regardless if the company is good or not, it doesn't matter how many followers it has or it has a cult or not, I have to speak the truth because that's lots of percentage from 687 to 540. Okay, so 687 to 540 divide by 687, that's a 20% drop from last week's high to this week's low. And last week's closing price was 666. That's what you should, I mean, I don't know exactly. Let me see. Closing was 667. So 667, you should have been like, all right, you know, it's the devil's number. Let me sell. No, I'm just joking. But 667, not 666. We're still below. We still traded below. So the week is negative. Doesn't matter how you ended it, it's still negative. Yeah, do I appreciate that it's, you know, not 538? Yeah, but still negative. So you have to look at that. Don't judge the stock market by a day. Okay? So we're still in the falling wedge. We're still in the middle of this falling wedge. We could drop down or up. We're in the middle. I will not take the risk. Okay. All right. Next up is ServiceNow. So let's take a look at ServiceNow. It's sitting at a very critical point. Lost its support, even though it's sitting at a low RSI and stochastics and everything is low. So it looks like you want to buy it. I wouldn't want to buy it here. It broke down the support that I mentioned before. It broke down huge? No. But do I see anything bullish in this chart? I don't see anything bullish. Let's take a look at the weekly. Only thing that I think that it would be bullish is on the weekly if it bounces from here. And it could go all the way towards 520s. Do I see that happening? Is it more likely? Not really. Let me delete this. I can draw a line. Yeah. I think it's gonna I think over some time, ServiceNow might test 400s. Now, is it gonna be a straight down path? No, it could go in a wave. It could go 520 and then come back and so forth until it hits the cloud bottom. Unless I'll change my mind if it breaks above 520. As long as it maintains in this channel, it seems like it wants to go lower. How low can it go? And remember, this is the weekly chart. I mean, yeah, this is what I'm talking about. Sometimes I don't have to draw any Fibonacci. I said it's gonna test like 400s, right? 418s to 375. Okay. Bearish on it. I'm bearish on the stock. Next up is PLTR, so let's take a look at it. This is the weekly chart. We can fix this weekly. I think sometimes it helps us see things clear. Strong weekly candle here. Yeah, very strong. And again, this was the week of earnings. Great earnings. This kind of showed analysts that it's not like one of those hype stocks anymore. It did a great job while maintaining its growth. There's some unicorn stocks out there that just grow on hype. I wouldn't say that Palantir is one. They have a serious business. So this is the weekly chart. The bounce, look for a resistance around $20.99, $21 area. Let's take a look at the daily. Again, nothing bullish yet. Do I see anything bullish? No. Did it break this triangle? Yes. So I'll show you what that triangle is. Kind of just like NNDM, it broke down that chart, or it broke down that triangle. Okay. It broke down that triangle, and it came to a place where basically I just thought that it was going to crash. At this point, when it hit $17, I thought we were just going to, and I thought we were just going to hit 15. The chart was completely broken. According to this regression, I said 21 on the other chart, right? This is 2050 here. So we'll see. It could go as high as the cloud top or the cloud bottom at around $23. Looking at the other chart, I'm seeing 2160, 2150. So that's going to be a resistance. If we break out 2344, I do have long-term projections, but it's just going to give, my target is pretty high for this stock. But if I say it, then people are going to think I'm pumping it because I own it. So I don't want to actually mention now on what I own, or like I decided not to show what I make, what is my percentage long time ago. It's because people expect you to show everything you buy and sell. I can't, I have a daytime job. When I sell something on the go, I can't just go on Twitter and post everything. So I'm done. Like, I'm not going to say what I own or what I have, or when I bought it, when I sold it. Okay. I'm just reviewing charts on request. That's all it is. And for this one, I see 2172. And then we'll see what happens. The biggest resistance is 2344. If it's above 2344, then I'll change my bullish side to it. I have the stock, by the way, and I'm still bearish on it. As long as it holds 1766, nothing is 1760, nothing is scary. If it breaks down and it loses this channel, shit, it's gonna go to $10. But as long as we stay above 21, then things will look good. Earnings are good, that's good. Huge resistance, 21. If we break above, then I think we're going to have a wonderful summer. Let's take a look at Peloton. No doubt that it's a beaten stock. Recent news has pulled it down. I don't know if they declared it right after the earnings, but somebody got hurt or somebody died off the treadmill, so they have to recollect all their treadmills on a recall. It's definitely, serious stuff. I know the company has a good reputation, but still, I think fans will still follow up. They're not gonna, but the new people that are buying, I think it's a good brand. Like, it's like the Apple Bend scandal, like the phone bend. Like, it didn't stop anybody not wanting to buy Apple again. Peloton builds good products. I mean, call it whatever you want. You can say treadmill, with an iPad stuck onto it. Call it whatever you want. But their business model is good, and also their followers are like cult, kind of like Tesla, kind of like Apple. On the way up, it could go to 120. Will it go? I don't think so. Resistance sitting here, right here, around the current price level. Let's say $100. There's a resistance at $100. If it breaks above, that line was kind of, let me fix this one. There you go. So resistance around 99.29. If it breaks, it's going to go to 105 and then maybe retest the bottom of the cloud. Okay. Best case is 120. Maybe basically trying this high again. Okay. It's definitely on a downtrend. No doubt. Am I bullish on it? Not yet. When will I be bullish on it? Until it breaks out of this trend. Then yes. Where can it drop the lowest? We'll take a look at 3 years on the weekly chart. Oh wow, the bottom could be in actually. 78 is the bottom of the cloud on the weekly. That's kind of exciting to see that. And it's not like the other stocks where, COVID is done, a lot of people are gonna, run outside type of thing. Buyers of Palantir, they buy Palantir, it's because they do indoor cycling. They didn't buy Palantir. Well, it might have increased their sales, no doubt, but it's not like, people bought Palantir because of COVID. People were buying Palantir anyways. Why am I keep saying Palantir? I'm sorry, my head is stuck at Palantir. I meant to say Peloton. And I've been saying Palantir for like some time now, right? I'm sorry. Peloton. So buyers of Peloton have been users for some time. This company didn't come out during COVID. For sure, it started increasing during COVID, but sales are off the roof. Good product. You're gonna say, well, it kills people. That's a joke. Okay, it's not. I mean, I don't want to make a joke off of somebody who died on a treadmill, but still, that's some serious news, and the recall is serious. But overall, I think the bottom is almost in at 78. I would be bearish if it breaks down the cloud. If it holds it, then you look for 120. I can draw another trend line here. Right here. So if you can go over 103, that's going to be really cool. This is the weekly chart, by the way. Let's go ahead and do Peloton. All right. There you go. So everything points out to this zone, which is awesome. That's good news. Okay. I just did retracement, and the retracement is even pulling off where we estimated that it would go to the cloud bottom. So look for 76 at its low. If it holds the 78, 76 area, then you can look for a recovery, or it could go down as low as this wedge right here, which is 60 bucks. 60 bucks is like the worst case scenario. I would look for a bounce off of 78, which it did. If it comes back, it's a nice buying opportunity, and sell it at 98. Okay. Next up is RIG. I'm pretty much familiar with this stock. RIG, there's tops, there's other stocks here comparable. They probably have the same chart. On the weekly, it looks like it wants to break out. It has a nice cup and handle. It's forming a nice cup and handle. You have a cup, it's forming a handle. Remember, this is weekly. If again, we go on full scale of reopening, it could go to 565. Let's take a look at the daily. Yeah, nice. So it broke out of the resistance. This is nice. Rounding bottom, very nice. I think it wants to go to 565. Definitely. And the recent news about, the hacking of the oil company or whatever, I don't know what it was, the gas pipeline company. I didn't follow up much, but oil in need, gas in need when we recover from COVID, 565 seems doable. I can delete this. It's been a pretty good, actually, this is good Fibonacci though. It's pretty predictive, so I don't want to actually delete it. I like the rounding bottom, the breakout, it's flagging. I think this is due for a run. I can draw a retracement just in case. It did complete, by the way, I do also want to bring attention to that. It did complete its run towards 413, like this area was the 61.8. It's kind of off with this. But you get the idea. It basically completed, retraced, bounced off of 50. Now it's coming back. Strong candle today, strong 7% today. We'll see if it breaks above 412. I think it's gonna have a huge run. Nice chart, beautiful rounding bottom. So this is what I'm talking about. 100-day moving average support all the way, and then it's ready for a breakout. And the breakout will be around 565. Now, tops is also a cheaper option, but the chart doesn't look as pretty. Yeah, the chart doesn't look as pretty. I like RIG's chart much better. I remember at 65, my sister bought it around like 90 cents, carried it all the way to like $3 somewhere around here. Yeah, so this is a nice looking chart. Next up is Square. Now it had, this is one of the top holdings of Cathie Wood's ARK. MACD is not ready yet. However, it does look like, let me try to do this correctly. Uh, I don't, I'm not a buyer. I'm not a buyer here. I don't see, again, don't get sucked into today's 5%. Tell me anybody, whoever is, viewing this chart right now, show me if this is a breakout. No, that's why I'm not a buyer. Okay. Let's look at the weekly chart. Now on the weekly side, let's delete these drawings. On the weekly side, yes, it's touching the 50. The resistance is going to be 236. Support is going to be 188. It does look like it's going towards a bearish crossover on the weekly. MACD is still nasty. RSI stochastic still bearish. I'm not interested. I'm not interested. There are better options here. So I'll just draw you the support and resistance, but do I know better than Kathy? No. She has like hundreds of people working for her. Obviously, she's going to have better, research. But just for the technical side of things, there you go. So support 202, resistance 240. Let's zoom out. Yeah, I would be a buyer. Now you're gonna say like, get the hell out of here. But I'd be a buyer around 150s, 160s. I don't like, and this could also pull out something like Netflix, Amazon type of thing, like just stay in this, trading range right here. Like it could just trade in this range for some time. And when Kathy has like $2 billion worth of Square, but just a reminder, guys, I remember Square when it was 20 bucks. I know it's the beginning of its company, like beginning of the when the company came out, like not even the beginning, actually beginning was much lower. I remember it like right here, like when it just slowly increased, then came back down. And then for the entire year from 2008 to 2009, it basically did nothing. And then from 2019, actually, yeah, from 2009 to 2019 to 2020 did nothing. From 2020, we had the coronavirus crash. It was at 32. That was a steal. Reason why probably Kathy has so much is because she probably accumulated here, maybe somewhere around here, and now she has a bunch of stocks, okay, worth maybe 2 billion. Issue is, will I be a buyer here? What changed since, well, maybe the Cash App and so forth. Is it Squares? Is the Cash App Squares, by the way? I'm not sure, but um, I'm not interested here. The valuation of the company, the chart itself, everything, unless you get the 50-day bounce on the weekly, you can go all the way up to 240. Not saying it couldn't happen, but still wouldn't change my mind until it breaks above that. You have a nice pennant here on the weekly, and let's see how that plays out. But it's only the beginning, so you'll get stuck in this if you position right now. Pulls up, goes to the cloud, comes back down. Goes up, comes back down. I think the support 172, 160 area will be a good buy. All right, next up is Unity. I thought, so when I did a chart and I thought this was a nice rounding bottom and it was in the cloud and I thought it was going to break out towards 128 and it didn't break completely down. This was obviously, it turned out to be a bear flag. Okay. And now all of a sudden, you know, every one of these stocks had a nice day. But if you look at the weekly performance on this, it's probably negative. Let's look at the weekly candle on it. Yeah, you see how nasty, now you see how things just turn around and change when you open the weekly chart? Although you close like pretty good, 8%, look at it looks nasty. Yeah, was I the one I said it looks good? Yeah, it looked good right here. It broke out on the weekly too. I thought it was gonna go on a breakout, and it just didn't. So at this point, I was wrong. The chart didn't play out the way I thought it would. What would be your next game plan? I wouldn't touch it. I wouldn't touch this stock. Okay. Well, this is what I hate about Thinkorswim. It's just so, sometimes I really like it, but the controls of it, it's just not the way I want it. Let's go to, yeah, I thought it was gonna just go ahead and hit there, but it just didn't play out the way I thought it would. Let's go ahead and remove the drawings. And it was totally reasonable. Like I wasn't saying like it's gonna fly off the roof. Wow. Yeah, this is basically done. I wouldn't touch this anytime soon. You have a small channel here, but it could very well be setting up the next flag. And it could go down to 71. Yeah, I'm not liking it because it's see, the thing is the stock is only, I could go back to September and it's already September, and it could be the next Big C. Big C had the same issue. It had this breakout and like people were asking me like what's gonna happen. When you have a stock that doesn't have that much history, you're like, you don't know the low. Broke out, I think this was the January run, all the stocks ran up, and then look where it is sitting right now. So going back to Unity, since we don't have much history of the stock, it could drive us anywhere. I just really loved the rounding bottom, but it just didn't play out the way I wanted to. Look at the stock, look at the waves. Most likely if it go hit, 92, it could continue its motion downwards. When will I be bullish on it? Anything above this line right here, 125. At this moment, I think that it's hard to say anything. You don't know how much it could go down. Right now, the support I see is like 66. All-time lows, or right here, like this, September 22s. If it holds, it holds. So let's not like go that far, but let's just do this, okay? Unfortunately. Now, you see how I squeezed out the chart just to, show you guys the trend, but if I do auto, you're gonna see how bearish it is. There you go. And you could also say this is a head and shoulder as well. I mean, not to a complete degree, but why is the right shoulder not playing? Okay. So, you decide the right shoulder could be here as well. It's kind of a little tricky, but there you go. I mean, if I delete this, you get the idea. Yeah. Unfortunately, maybe the product is good and everything, but if it holds these levels at 76, okay, but I think it could see 66. it could hold 66. Yep. Next up here is Uber. This is the weekly chart. Again, a lot of people can say that, oh, you know, Uber had a great day, 6%, but look at the weekly candle. What is this, like a hammer, I guess? Pretty good recovery here. I've never seen a candle like this on Uber before on the weekly. Let's see how this plays out. It broke down the 50 and came back up. Wow, horrendous candle here. A lot of selling volume on the weekly. Yeah, I would say if it bounces off the cloud at 41, I'll be a buyer. You notice how it reached our target and then it just collapsed. Let's take a look at the daily. You see how it looks on the daily? And look where it reached on the daily. 9-day. 9-day moving average, okay? Close right on that. Now, two things could happen. MACD could curl up, stochastics, RSI, everything looks ready, and could go all the way up to 55. I wouldn't be surprised, okay? My target, I'm going to be conservative and say 51 to 53. I said it could go to 55, but let's say 51 to 53. That should be my target. But I think, again, it's on a downtrend line and it's probably forming some type of down channel. Looks like it broke out, but I'm not digging it. I wouldn't trust this. What do I like about this stock? When people go out, you know, we're gonna have COVID gone soon and the reopenings, and people are gonna probably, you know, go out more. Travel is gonna have, you know, use Uber from airports. And then there was some news some time ago that states or federal government wants to work with Uber and Lyft to drive people to get, you know, vaccination for free. Government will pay for it. So that's some good news, but it didn't really affect much. I don't like the way it drilled down 50, but it came back up. Let's see if it retests 44 again or 45 again. Clear support is right here. I would test Uber around 38s. I'm not a buyer here. Don't get excited. Don't get excited if it goes to 53. Wait. You see this line right here? Like 1, 2, 3, 4. Okay, lot of candle bottoms here, which was a support. It's gonna act as a resistance. And that resistance area is basically where we marked, 51 to 53. Okay? So be careful. Usually, and I could do this a little higher, maybe like somewhere here on the weekly, and we can say we can increase the target a little bit. And say 52 to 54. So anywhere around next week, you can see that, but I think 52 is going to just reject the heck out of it and pull it back to 43 again, okay? Last one is VUZI. Let's see. I think by far this is the longest video I've ever done because I had the longest list ever this week. Bearish on the weekly, bearish MACD, bearish stochastics, RSI lost its strength. So, and it's below 20. It could retest 50-day, which is around $10. Now let's take a look at the daily. And then it also lost this trend right here. Okay? Let's delete all this fib. And then maintain the 61.8 above, so that's pretty good on the weekly. Let's take a look at the daily. On the daily, you see that again, went down below 61.8, came back up. Can it be a double bottom? I don't think it could play a double bottom anyways, because it's been like, yeah. Yeah, you see how the bottom of this candle basically was a support at this candle. So I'm going to draw this support line right here. That's going to be your support line. Now, if you break down below, you're seeing these candles. Okay. So 1361 and then 1280 is going to be your next support level. Resistance at 100-day moving average on the daily, which is 1773. And I'm surprised that this didn't really pick up on such a great day for all the growth stocks. Very interesting. Would have expected to go like nuts today. That's that. Okay. Yeah, I think approximately where the 9-day is 18 bucks. Let's say 18 bucks is your resistance. But if you break down these support lines of 1370 and 12, what is this, like 1275? You're gonna have a major pullback down to $10. That's the point. That's the place I was mentioning. So this right here around 10. Okay, that's gonna be your next level. If these two don't hold, it's gonna be a major down. So be careful with that. I'll repeat. 13, 13, what is this? 1370. 1280. If 1280 doesn't hold, then 10 bucks. On the way up, usually why I don't talk about up is because the stock is bearish at this moment, but if it does go up all the way up like a huge move, 1835. That's it, guys. So that was my analysis for 31 tickers. It took about 12 minutes and 12 hours, 2 hours, I'm sorry. You can see how tired I am. Non-stop I did this. 2 hours and 17 minutes. I hope you like the content. Give us a thumbs up for the effort. You can comment if you don't agree on anything as long as it's appropriate, not offending anybody. And also, you know, follow us on Twitter for the live updates we do. Sometimes I do chart updates and so forth. Having said that, I'll see you guys next week.